Don't like the idea of buying stocks at all-time highs? Looking for stocks that still haven't recovered their pre-pandemic pricing? Want to collect safe, growing, market-beating dividend income? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, please give us a big thumbs up if you find value in our videos. Helps us to get the word out and grow the channel, and I'd really appreciate it. The US stock market is cruising along at all-time highs. The S&P 500 is up more than 40% over just the last year alone. And it's now priced higher than it was before the pandemic. I don't think a lot of people expected the market to rebound so quickly off of the pandemic crash, but here we are. Yet, a lot of individual stocks within the market still haven't recovered their pre-pandemic pricing. Some stocks are still down significantly compared to where they were in early 2020. That's even while their businesses have basically fully recovered. Some of these businesses are doing even better now than they were before the pandemic. Business recovers, stock doesn't recover. Yep, that disconnect could be an opportunity for long-term investors. And that's what I'm talking about here. Today, I want to tell you about 3 high-quality dividend growth stocks that are still priced below their pre-pandemic highs. Ready? Let's dig in. The first stock I want to tell you about is Lockheed Martin Corporation, stock ticker LMT. Lockheed Martin is the largest prime defense contractor in the world. Sovereign defense products and services have always been necessary and always will be necessary. That's just human nature. Investing in these businesses is almost a total slam dunk over the long run. However, sometimes you're offered a particularly good opportunity with them, and that could be just what you're looking at with Lockheed Martin. The stock is currently priced around $385 a share, but it was well over $400 a share in early 2020. Get this, Lockheed Martin produced $21.95 in earnings per share for 2019. So going into 2020, that's the earnings number. The company has logged $24.78 in earnings per share over the last 12 months. Earnings per share is up more than 10% compared to early 2020, yet the stock is down more than 10%. That's the advantageous disconnect I'm talking about. Lockheed Martin is a very high quality dividend growth stock. Fundamentally, the business is excellent. They've increased their dividend for 18 consecutive years with a 10-year dividend growth rate of 14%. The stock yields 2.7%, which is very attractive in this market. Lockheed Martin is actually one of my top 5 stocks for 2021. Even though it's up more than 8% year to date, it still looks like a bargain. The second stock I want to tell you about is Pinnacle West Capital Corporation, stock ticker PNW. Pinnacle West is a fantastic Arizona-based utility company. Electricity, that thing that makes our society work, yeah, we gotta have it. And so utility companies are about as sure a thing as you'll find in the business world. What's also sure? The fact that this stock has not yet recovered its pre-pandemic pricing. The stock was priced over $100 a share in early 2020. Now, it's priced around $86 a share. The company's earning more today than it was earning in early 2020. It came into 2020 with earnings per share of $4.77. Earnings per share is now near $5. Not a huge jump, sure. I wouldn't expect one for a utility. However, while earnings have gone up, the stock has gone way down. That's where the opportunity could be. Pinnacle West also offers a market-beating dividend of 3.8%. Whereas the market is at all-time highs and offering a yield of below 1.5%, this stock is well below its all-time high and gives you a yield almost 3 times higher than that. The company has increased its dividend for 9 consecutive years with a 5-year dividend growth rate of 5.7%. Very respectable for a higher-yielding utility stock. It's up about 8% year to date, but it has to go a lot higher before even breaking even, and I think it'll do just that. Last but not least, let's talk about WP Carey Inc., stock ticker WPC. WP Carey is a global real estate investment trust. WP Carey is about as solid as they come. They own properties ranging from self-storage to government offices. They do all the hard work in real estate so that you don't have to. You just sit back and collect your check. As nice as that sounds, it's made to be even nicer when you see that the stock isn't even close to where it was before the pandemic hit. The stock is priced around $75 a share right now. It was almost $90 a share in early 2020. So the stock is well off of where it was before, but the business really isn't. Now, this name is different from the other two in the sense that the business has taken a very slight hit. The business has almost fully recovered. So WP Carey produced $5 per share in adjusted funds from operations for fiscal year 2019. So that's the earnings picture for early 2020. They're currently guiding for $4.79 at the midpoint for adjusted funds from operations per share for this fiscal year. We're talking about a small business difference of less than 5%, yet the stock is off about 20%. WP Carey has increased its dividend for 24 consecutive years, and it offers a market-smashing yield of 5.6%. That yield is 4 times higher than what the broader market offers, and while the market is bumping up against all-time highs, this stock is very much not doing that. The 5-year dividend growth rate is only 1.7%, but you don't need huge growth when you're getting a near 6% yield. This stock is up less than 7% year to date, although the huge yield means it's not a compounder that'll see explosive moves in the stock. It's a great income producer though, and it's available for well below where it was pre-pandemic on both a price and valuation basis. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about these 3 stocks. Please make sure to subscribe to the channel and ring that notification bell so that you don't miss out on new content. Also take a look at the description box below for some important links, including a link to my personal stock portfolio. This 6-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over a Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who have been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.